This John Lothian News video is sponsored by How has ISE Gemini performed since its launch?
We reached over 2% market share, faster than any options exchange had ever achieved that competitive growth, including ISE. So we were very, very pleased with what we were able to do the first month. And we were able to roll out the top 300 names for trading, and that was not what our original plan was. But with the technology performing extremely well, and the market makers joining and firms joining up, we really felt that we had enough proof of concept to roll out faster. And so we were able to get to the top 300 pretty quickly. We're very pleased with the reaction from our members so far and what their thoughts are in terms of routing flow. And that was the whole purpose of Gemini from day one, which is to get flow that would rest on the order book at the exchange, something that ISE, because of its pricing model, is not the most attractive destination to rest customer flow. We think Gemini is the answer for firms that are looking to rest flow and receive a rebate when that flow trades.
Who is using ISE Gemini?
Well, it's the resting customer flow that is key. The high rebate model for resting bids and offers is what attracts that flow to the exchange. So from a firm perspective, it's the very same firms. I think all the exchanges basically have the same members. But in terms of where flow is sent, each situation, depending on what the quality of the market is at the time, whether you're setting the NBBO or not, whether you're going to receive a rebate or pay, all dictate what you're going to do with every single order that's sent to an exchange.
What's next for ISE Gemini?
Well, we're still leaving about 10% of the average daily volume in the industry off that market. So we will begin to roll out the hardware that's required to add those names because we have the top 500. It represents about 90% of average daily volume, but the other 10% is still a significant piece of the business, and we don't want to leave that. So we'll be increasing the capacity of the exchange and ensuring that it can handle more products.
What's next for ISE?
There are a couple of things going on. Moving away from the options for a second, one of the areas that we have focused our attention on is the ETF space, the creation of indexes that are used as benchmarks and then licensed to ETF providers. In fact, we even have one of our funds that is the base of a mutual fund and looking to be able to do more of that. From ISE's perspective, the P&L is impacted based on the assets under management of the ETF or of the mutual fund. So it's not correlated with trading volume. It's closely associated with how much money is being invested into those funds. And we think that's an interesting area for us to explore in parallel with what we're doing on the option side. And on the option side, implied orders is a great example of functionality that can be built on top of what you have already to offer more opportunities for your customers to trade and to improve the quality of your markets. So we'll continue to look at that opportunity, which is new order types, new systems capabilities, and continue to try to grow the business that we have.